Hello, hello, hello. Come on in. Come on in. I want you guys to see my shirt. Let's see if I can sit up bigger. Yes, that's better. Hello, hello, hello. Come on in. Come on in. Come on in. Come on in. Today is Let's Talk About It Thursdays. Talk About It Thursdays. I am so happy to be back on Facebook Live. Yay, yay, yay. Come on in. Come on in. Come on in. As always, I'll give it a minute for you to join me. I want to compare old glasses today. Because I'm in my recording studio. Come on in, come on in, come on in. Welcome, welcome, welcome. Let's see what we're talking about here. Come on in. I'm adding to the chat my website. Come on in, come on in, come on in, come on in, come on in. Because I'm about to get started. So today and on Thursdays, all Thursdays, okay, I will be doing a Talk About It Thursday, okay? And what we going to talk about? Business. So on Tuesdays is Tax Tip Tuesday. Join me on Tuesdays, Tax Tip Tuesday. But on Thursdays, we're going to do Talk About It Thursdays, where we talk about different topics on business, okay? So let me introduce myself. I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. And today I want to talk about business structures, okay? Because we want to be clear. You hear me? Have a clear understanding of what business structures do and what they don't do for you and your business, okay? It's vital and it's important. And knowledge is power. I'm a firm believer in that, and I practice what I preach. You hear me? I bring to you over 35 years experience in accounting, in bookkeeping, in taxes, okay? And in what don't I know? Look, I done did so much studying, I done forgot myself. Anyway, I have a master's in business, a master's in accounting, as well as a master's in public administration. So I bring to you a wealth of knowledge and experience. I've been in this financial industry for over 35 years. So I bring to you, please say hello when you join me. I love, love, love company, and I love, love, love your participation and questions, okay? Because I'm here to answer what you want to know. So today we're going to talk about it Thursday, and we're going to talk about business structures. So there are several business structures that you could choose from, but which one is right for you? Okay, this is where people get caught up. Because one thing about it is people jump on bandwagons, right? Don't be the people that jump on bandwagons. Jump on when you know you want to get the information that's there. Okay. So there's four types of business structures and one tax structure. Okay. One, sole prop in your business, sole proprietorship. Okay. There's also LLC/LLP. They're one and the same, limited liability company or limited liability partnership. There's C corporation, and there are nonprofits, which is also a corporation. Okay, it's just not classified as a C corporation, it's classified as a nonprofit. Okay, S corp is a tax structure. It is not a business structure, it is a tax structure, meaning that you could be an LLC and choose to be taxed as a S corp. You could be a C corp and choose to be taxed as an S corp. Sole prop does not have that ability, and nonprofits does not have that ability. Nonprofits don't need that ability because they're tax exempt anyway. Okay, so let's go into these different tax structures or different business structures. Let me rephrase that: business structures. Okay, sole prop. Sole prop is you and your business. Okay, it does not separate the two. You and your business is as one from a tax perspective, meaning that you do not have the luxuries and the deductibilities the same way as businesses do. So, an example of those items that cannot be deducted is your wages. As a sole prop, all the revenues, or net profit, I should say, is considered your income. Okay. So you don't get to write off the money that you take out the business because all of it is yours. Okay. The one that I like to lean heavily in is the LLC. People get confused thinking, oh, why have an LLC? Why? Do you even know why? Did you follow the bandwagon? Okay. What are the tax implications of being an LLC? Guess what an LLC is? It limits your liability as a sole prop. If you are a single member LLC, it goes on your personal tax return just like sole prop business. It's a Schedule C. Okay. You are not separating you from your business. Meaning, if you're applying for loans, cars, or anything else that require your financial or revenue position, you have to present your personal tax return to prove the revenues and income that you earned in your business. Say hello, hello, hello when you join. Please, please, please. I would love to know who is I'm talking to directly, but I also love to participation. So join in with me. If you have questions, please spit them out. I love interactive conversations. Okay. So LLC is you're not separate from your personal and your business. Okay. So let's be very clear about that. You also don't get the same tax benefits as an S Corp or C Corp will be. Some people think that you have to be or have certain revenues or a certain amount of revenues to be an LLC or an S Corp. No, you don't. I always mentor and train. Keep your big picture in mind, not your here and now. It's where you're trying to be and what you're trying to do in your business. Because bottom line is where you are right now is not where you plan to stay. Right? Right. Okay. Think about what you want to do in your business and how far you want to take it. Now, sole prop or LLC may be the perfect structure for you. I'm not for or against sole prop, LLC, C Corp. I am biased to S Corp. I will say that. And that's strictly because the benefits you get being an S Corp. So if your business that is looking to expand and broaden your offerings, okay, S Corp may be for you. So I don't say go into it with what you want to be right now, what you plan to be now. What's your big picture? What is your goal? What is it that you're trying to achieve and accomplish, right? You think small, you play small. I'm not a small thinker. I jump out on faith in a heartbeat. You hear me? And that's why I built a six-figure business after leaving a six-figure corporate position. Okay. Within 1 year of leaving my corporate position. Okay. So I began with the end in mind. Where am I trying to go? Where am I trying to achieve? Where am I trying to accomplish? And that's how I structured my business when I walked away from that six-figure corporate position. Okay. Begin with the end in mind, because you play small, you're going to think small, and that's as far as you're going to get small. Okay. Think big, go for the gusto, reach your fullest potential, because you are who you say you are. Period. If you say you lackluster, then you're going to be lackluster. So even in your business, if you dream big, your dream becomes big. Does that make sense? Your results is that much bigger. So your business structure should reflect your big picture that you have in mind. Again, not your here and now. You're not staying right here. You want to look at your bigger picture. Where is it that you're trying to go? What is it that you're trying to accomplish? What are you trying to achieve? and set your business up accordingly. Okay. So some people believe that you have to start a business as a sole prop. No, you don't. No, you do not. Or that you can't be an S corp right off the bat or a corporation right off the bat. Yes, you can. Yes, you can. You hear me? So play big. Whatever it is you want to do in your business, do it. There is nothing stopping you. There's obstacles that's not going to stop you. What don't kill you do make you stronger. I'm a firm believer, and I have testimony on top of testimony on top of testimony to support that belief. You hear me? Okay. So keep in mind, your business structure impacts not just your mindset, your logic, right? It affects your position and your taxes. People don't even realize that. Okay. The jump on the bandwagon train, right? You became an LLC. Did you even know what that meant? What tax benefits you were going to get out of it or not, right? Have you researched? Don't go by what I say or anybody else for that matter. Do the research. But I am bringing you over 35 years experience, okay? And I study this stuff. Continuing education always. I am very pro S Corp from a standpoint of bigger picture, okay? I always like to use hair salon or the hair industry as an example because there's so many different avenues you could go with that. So you could be a hairstylist right now, but do you rent out a booth in your hair salon? Did you buy the building, right? Buy the building and rent out your hair salon. Have your own product that you sell in your salon, right? Or open up a brick and mortar store, online stores. Online is big now, right? Amazon, right? Why would you stay a sole prop and you building all of these different things, right? Sole prop is not going to protect you because number one, it don't even separate you from the business. You are the business, okay? And nobody lends to a sole prop, period. You have to use and invest with your own money, okay? As a LLC, you get perks and benefits and stuff like that. Not necessarily from a tax perspective, though, because the simple fact is it's still on your personal tax return. You get to write off some stuff, but the example I gave earlier was wages. You don't get to write off what you take out of the business. That's not a business expense. That takes away from your net profit, yes, but it's all your money. Your whole net profit is your money in a sole prop, okay? LLC single member, what I mean by single member is you're the president, the secretary, and the treasurer, because you have to have those three positions when you become an LLC or a corporation, okay? That means that you're all of those positions. You're a single member. Nobody else owns a piece of your company. It's only you. You are a single member LLC. That goes on the Schedule C the same way it does on the sole prop. So what's the difference? The difference is somebody can't come after you for your personal assets. That is the difference. That's it. They cannot sue you for your personal assets. Limited liability. And the key word is limited. Okay, so research that too. How much of a limit do they limit, right? Think big picture. As a corporation, however, you are separate from the business, okay? Being taxed as an S Corp, whether you're LLC or a C Corp, if you're LLC, it's still the same. LLC limits your liability. Your tax treatment allows you, or the S Corp tax treatment allows you to take those same deductions that you couldn't as a regular single member LLC. Yes, you could be a single member LLC taxed as an S Corp, okay? S Corp gets you those benefits of being able to write off almost everything through the business. Keyword is almost. If it's vital to the operation of your business, to the success of your business, or to the functionality of your business, you can write that off. LLC, you're not just limiting, it's not just limited liability from somebody could come after your personal assets. It also limits what you can write off, okay? because even as a sole prop and LLC, single member, certain benefits you cannot write off. So you may remember or may recall, especially if you do your own taxes, that as a sole prop, for example, you can't write off your health benefits. They ask you, are you in business and do you contribute to a health insurance premium as part of your sole prop or part of your business? The answer is yes, but it's not a business deduction. It just is classified different. Okay. Otherwise, you record them on your Schedule A, which is itemized deduction. With Trump's tax law from 2018, standard deductions have increased so much, it almost doubled from what it used to be when he took away the exemptions and just gave you a higher standard deduction. If you have a big family that you had on your tax return, you guys lost. However, if you're a single person, period, on your tax return, you made out like a bandit because your standard deduction is so much higher. So a lot of people don't itemize. Most people that itemize either have high tax bill, like I'm in California, a high tax state, right? Trump did that on purpose too. He limited how much taxes you could write off to 10,000. Hell, excuse the French, but that's my property taxes. Okay, they don't have nothing to do with my income taxes. Before you used to write off your income taxes, your property taxes, personal property taxes, but he limited. You can, but it's going to be limited to the 10,000. So, as an example, unless you're itemized, like the interest on your home, your mortgage, your insurance, he took away your job deductibility. The state kept it, but feds didn't. Or if you have a large contribution, like you do large charitable contributions, then you may exceed the standard deduction. Otherwise, you don't. So things like your health insurance doesn't benefit you as a sole prop. Okay. Same thing with writing off contributing to a retirement plan. You don't get to deduct that either. Not in sole prop and not in single member LLC. Those are outside of business expenses. Okay. Because even in the LLC, single member, it's still based on your net profit. Okay. It's all considered your income. They're not passed through entities. Those are your income. C Corp being taxed as an S Corp are considered pass-through entities where it's the net profit that passed through to the shareholders, whether you're 100% or 60-30 or 60-40 or 70-30, whatever percentage ownership you have in your business, that's how much of the net profit or loss that you get to account for on your taxes, okay? But that's also, from an S Corp perspective, outside of deducting your wages, okay? Deducting medical, deducting retirement plan contributions. So if you work for a company and you know how they offer you medical, they offer you dental, they offer you holiday pay, they offer you maybe investment or matching your 401k, things like that. You could do all of that as a corporation because you are just like them, right? They don't get to do all of those write-offs and all of that stuff as sole prop. Sole prop means it's you. You may have staff and you can write off their stuff, but you can't write off your own. As an S Corp, you can. You write off your own as well. Okay, so it's a much better tax strategy. Keyword is tax. Thank you, Miss Aaliyah. Long time no see. I miss you. That tax strategy is what gives you the ability to reduce your tax liability. Okay, reduce, but get the benefits, the perks, as you would working for somebody else, but you're working for yourself. Okay, that's the benefit of being a corporation or taxed as a corporation. So again, business structures is vital for you to know what your business structure is and your tax implication being in that business structure. There is no one size fit all. Just because Jane Doe down the street, we do the same thing, have the same career, she chooses to be sole prop, that don't mean I have to be sole prop. I'm going to build my business and choose a business structure that has my big picture in mind. Where am I trying to go? What am I trying to achieve? Because I'm not thinking about the here and now. I'm thinking about where I'm trying to go. Therefore, I do it one time. I'm one of those. Do it right the first time. Okay. Begin with the end in mind, because I will tell you this: setting yourself up as one entity and then choosing to go to something else. Let's say a sole prop, you get an EIN. You have to change your bank account. You got to change your EIN and all of the above to become an LLC or higher. Higher meaning S Corp, C Corp, right? You can't stay in that sole prop structure. So everything you've built around your branding as a sole prop pretty much go away if they're not available as a corporation. So be mindful of that. Begin with the end in mind. There's no changes. Thank you, Miss Cristal. There's no changes if you set it up right the first time. What you scared of? Success? There's no reason for you to start as a sole prop unless you choose to. Because you only want to do this as a side hustle. I'm not trying to live or be outside of this little space, this little bubble I'm in right now. That's where sole prop remains. Okay. You got big dreams, big plans, big ideas, beginning with the end in mind. No way should you start or be a sole prop. Period. Yes, this is my opinion. Please ask your question, Miss Cristal. I love interaction. No reason for you to start a sole prop. I'm not knocking sole prop, don't get me wrong, because guess what? I started as a sole prop, Tracy Tate bookkeeping, before I became a corporation, TLJ Professional Services. Okay? Some people, no, it wasn't because I thought, oh, I have to start as a sole prop. I started as a sole prop because I was playing small. That was all I wanted to do. But guess what? I woke up and was like, I'm tired of building somebody else's dream. I'm ready to build my own. So guess what I went from a sole prop to a corporation. I didn't even go in between. I have never been an LLC. Not in this business anyway. I do have an LLC for my rental property. That's it. I went from sole prop to S corporation, as a corporation though, not even as an LLC, because I offer more than just bookkeeping. We do bookkeeping, accounting, taxes. I do coaching. I do courses. Okay. I'm an LLC for years and I've been wondering how to pay myself. Now I feel like I need to be an S corp. I am very pro S corp. And yes, you are correct, because as an LLC, you are not deducting or getting the tax benefits that you can if you choose to be an LLC taxed as an S corp. Now, because your LLC already exists, you have options. Your LLC already exists. You can elect to submit the form or the document to be taxed as an S corp, but you got to explain why you didn't choose it a long time ago. And the IRS can deny your election request. Or you could create a new S corp and have the S corp take ownership of the LLC. You've heard of acquisitions? You've ever been with a company that acquired other companies, right? You would have your S corp, your new S corp, with that election, acquire your old LLC. You don't change no branding, no nothing else. It acquires. So the LLC stays the same. However, who filed taxes is the S corp, because that's who owns it. It's called a consolidated return. I hope that answered your question. Ask another one. I love questions. Love them to death. Let me tell you again who I am, because that was a long time ago. I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial, and I bring to you over 35 years experience in bookkeeping, in accounting, in taxes. Okay. I have a master's in business in accounting as well as public administration. And I work with small business owners, love the hearts, small business owners and entrepreneurs, to meet them where they're at, whether you just getting started. So we do business setup all the way through tax prep. Okay. So we can help you anywhere along the line. Wherever you at, we got you. Wherever you're trying to get to, we got you. You hear me? These years of experience, and I'm glad I'm in this space because I've always been a natural giver and a natural teacher. I love to learn as well. So being in this space, working with entrepreneurs, so whether you're just getting started or been in business for years and you're looking to move to the next level, that's what we help you with, to make sure that you have a clear understanding of your choices, okay? Because you don't know what you don't know, right? What I don't know, I research it though, but I'm here to help you get to where you're trying to get to. I'm gonna give you an example of a client I started working with 2 years ago. It's a restaurant. When I started working with them, they were trying to figure out why their profits were so low. I identified it was in their cost of goods sold and their payroll. It's not so much a DBA. It's not considered a DBA for your LLC. Your LLC will be a DBA of the S Corp or a entity of the S Corp. The DBA really is when you're a certain, anytime you don't use your name, you have to do a DBA to be a business, okay? A legitimate business, okay? Otherwise, you could use your name and don't have to do a DBA or a fraction of your name, your initials, your last name, whatever. You don't have to do the DBA. When you do your business with an S Corp, if you notice on a W-9, for example, it'll say business name or legal name and the business name. It's not necessarily a DBA. So you don't have to label it that, but it does get treated as a DBA because you'll be a DBA doing business as just with your first name if you had not chose to be an LLC. DBAs follow sole prop a lot simply because there is no legal structure for sole props, if that makes sense, Ms. Christal. Okay. So this client I've been working with, restaurant. So I've been analyzing their books, letting them know, okay, you guys are not in the range of industry benchmarks of what they should be in the restaurant industry. Why are they overpaying on this? So I revamped their entire process of running their business. I celebrated them expanding to Las Vegas on New Year's this year. I am so proud of them. But they expanded just by following and working with us. We were able to get their net profits where they wanted to be. I created the business plan for them to get into the Venetian in Las Vegas. You hear me? Venetian is very prestigious in and of itself, but look them up. Blue Saigon, Las Vegas. They expanded from right here in California. They were staple in the Bay Area, right? Anybody in the Pittsburgh, Antioch area know exactly who Blue Saigon is. But I helped them expand to Las Vegas, and now they will be a staple in Las Vegas. And I am so, so proud of them. And I'm so happy to have been working with them to get them where they wanted to go. So they were sole prop when I first started working with them. They are no longer sole prop. They are an S Corp that has now expanded to Las Vegas. And yes, their LLC in Vegas is a DBA because it was a requirement of the state to be a DBA. Okay. But that's what we could do for you and your business as well. So book a free consultation. We definitely have them. So like I said, we start with people where they at. So I have books on this same topic that you could go to my website, tracyltate.com. So that's the cheapest of the cheapest you could get. You hear me? But you'll get the information that you need to be successful in where you're trying to go. If that's what your budget called for, get the book. I also have courses at About All Things Financial. I put that in the chat earlier. About All Things Financial is my courses and coaching or what do you call that? Entity structure, I would say. There is for the do-it-yourselfers. You want to learn it yourself, do it. So those courses are mid-range. They are affordable. All of this stuff is deductible for your business. Do not forget that. This is continuing education for your business. It's a business expense. Okay, you get to write it off, whether you sole prop all the way through S Corp. Okay, it's educational for you to work with those things. Now, to work with us is TLJ Professional Services. That is our done for you services. So it is tax season right now. Tax season, I did mention this on Tax Tip Tuesday. Tax season, They open e-filing on January 24th. Is your books ready? Are your books tax prep ready? We offer that service as well. It's a CFO review. That's on our tljprofessionalservices.com website. So it has been my pleasure and honor to come to you on this Let's Talk About It Thursday. I will be here every Thursday talking about different topics. Today was about business structure, what they mean and what they don't mean, because people, you need to be clear. You running a business. Again, my belief is start with the end in mind, because who want to recreate the wheel? Who want to redo what's already been done, right? You built your brand this way, but you got to redo it because it's not available as a corporation. It's not available as an LLC. Those are registered businesses. That's why you do not have to do DBA when you're doing an LLC or a corporation, because those are registered businesses. DBAs mostly follow sole prop, okay? Even if your business acquire another business, they don't become a DBA. They're a division of your business, okay? Look at God. I've been thinking... Look at, yay, I'm glad you've been following me, Miss Christelle. Take advantage of the free consultation. It don't cost you nothing when it's free, right? We either fit or we ain't. But either way it go, I guarantee you're going to learn something. And by the way, my courses are 30-day money back guarantee, because I guarantee you're going to learn something in my course or you get your money back. You got to prove you ain't learned nothing, because I guarantee you're going to learn something. Okay, but get on our calendar. We are doing 30-day money back guarantee for the courses, but we do a 30-minute consultation to see how we can help you in your business with where you're trying to go. Okay, we have payment plans, installments, all that good stuff. So again, we work with entrepreneurs and small business owners, meet you where you're at to help you get where you are going. I am Tracy L. Tate. It's been my pleasure and honor. Again, look, I think I talked another 5-10 minutes. That's me. That's right. But anyway, it has been an honor and a pleasure to spend this time with you. Please like, share, comment. Hey, it takes a village. Join our village. You have a blessed evening. Good night.